Good morning, traders, and welcome to the live stream. My name is Charles. I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. My apologies that I don't have my camera on this morning. I promise I look good. It's just my camera isn't working for some reason, and I didn't have time to play with it before starting today. So we're going to have to go camera-free on me. But you can just focus on the sweet, sweet sounds of my market analysis. Okay, so what do we think the market is going to do today and this week? What are we looking at? Well, I think the easiest way to make sense of my sort of intraday analysis of what I think the market is going to do today would be to first zoom out and get a little context of what the market has been doing. So let's start by just taking a quick look at the monthly, the weekly, and the daily chart just to get some context. On the monthly chart, we see that the market is one time framing higher. That means it's making higher highs and higher lows every month. That has continued this month, which means it should be able to, at the very least, continue again next month, right? We still have momentum. Now, the momentum doesn't last forever. We don't go straight up forever. Eventually, the momentum runs out, but on the monthly time frame, we have not run out yet. So this market could go higher for another month. Okay. Next, we got the weekly candles. Same story there. We're seeing a sign of momentum to the upside over the last few weeks. The market is continuing to make higher highs and higher lows. There's no reason on earth that can't continue again this week. So there's nothing particularly bearish on the longer time frame. Let's take a look at the daily time frame. Well, now we see that the market is in balance. It may look like momentum over the last few months. It may look like momentum over the last few weeks, but when we really dive in and we take a look at what it looks like, day by day, the market has just been balancing, right? It's just been going sideways inside a range. Okay. The way it's been going sideways, we describe it as balance by pin. And the easiest way that I can think to explain this, I'm on the SPX right now. Let me switch to the ES. There we go. The best way that I can think to explain this is essentially you got your pin that's in the middle of the range. The further that you get away from it, the more likely you are to come back to it. Okay. So for example, on Thursday of last week, we made a big move away from the pin, but then on Friday, we came back to the pin. The level that I have marked as the pin is 67.05. The high of the day on Friday, 67.04. Okay, so this market is pinned. We are continuing to come back to that level. This morning, we are opening with a massive gap up. We're starting our new move. Now, there's two ways that could play out if we think about this as a balance area. One way is we can continue up to the balance area high, which would mean essentially testing all-time highs today, intraday, or we could turn around and head back for the pin. Because when the market is pinned, all you know is that you're likely to go back to that pin. You don't necessarily know it's going to make it from one end of balance to the other every time. It might, but you don't know for sure. So, okay, that's our data going into this. Longer time frame, everything looks bullish. Shorter time frame, we're balancing inside a range. As far as that range is concerned, it is balanced by a pin, and we have over the weekend, made a move away from that pin. We've made a move to the upside. So this morning as the opening bell rings, what I'm basically asking myself is, are we heading up for those all-time highs at, 67.56, or are we heading back to the pin at 67.05, which would basically be a gap fill because the gap fill is 67.04. So are we looking to fill the gap today? Or are we looking for continuation to the upside? Now, we have something that we call gap rules. Gap rules are essentially a way to think about the market when we are opening with a gap up. So first and foremost, how do I measure a gap? A gap is from whatever is the current price when the market opens to the previous day's high, if it's a gap up. Okay. I do not do to the previous day's closing price. I use the previous day's high. So this morning when the market opens, if it were to open right where we are right now, we still got, 25 minutes, so it could be anywhere. But let's say it were to open right where we are right now. Well, then we would have a, 26 point gap. Okay. Anytime a gap is more than 20 points, we call that a large gap. Okay, we basically just differentiate that from a gap that is less than 20 points. Now, gap rules tell us if it is a large gap, it is less likely to be filled that same day. Okay, larger gaps, we often don't fill them. We either go sideways at the upper end of the range, or we just keep trending higher and we move higher that day. So in and of itself, the fact that the market is in balance and that we have a gap up and that it's a large gap tells us that the market is likely to continue higher. But because it's balanced by pin, which is this very specific sort of nature that the market gets in sometimes, that in my mind means the higher probability today is a gap fill, even though it's a large gap. Okay, I still think the higher probability today is that the market wants to fill the gap. So now I have a bias for the day. I have a longer term understanding of what the market is doing, which gives me an ability to make predictions on a shorter time frame about what the market can do today, either fill the gap or head to the all-time highs, right? And then I'm coming up with a bias, an opinion of which of those things is most likely to happen. In my mind right now, the most likely thing is the gap fill. Okay, so now what's the next step in the process? Now I have to decide, how would I trade that gap fill, right? Like how would I enter trades, for the market to get back down to yesterday's high? Well, there's, multiple different ways I might trade the gap today. One would be what we call a look above and fail of the overnight high. So if the market opens this morning and it starts to push higher and it's looking bullish, okay, and it's looking like the market is going to head to those all-time highs, and they're able to get above 67.35. But then once they get there, they turn around and come back in. Okay, there's only two things that can happen when they get there. Either they bring in support and they keep going, or they fail. They turn around and come back in. If it fails and it turns around and comes back in, getting short at whatever is the opening price, and again, we still have 20 minutes. We don't know what the opening price will be, but getting short at whatever the opening price is after the failure with a a stop sell order at the opening price. Once that fills, I would put the stop above the high of the day and I would put the take profit at the gap fill. Okay, so the market opens, pushes above the overnight high, comes back through the opening price. I'm short, stop above the high of the day, target the gap fill. Okay, another option for how the market could fill the gap today would be the market opens, chops around for a little bit, and then just immediately heads down to fill the gap. Okay, if that is the case, I would be willing to chase the short a little bit. So let's say I'm not confident enough to get short while it's chopping around, but then it starts to make its break. It starts to build some momentum lower. I can get short then, trusting that they will fill the gap. Once we break away from the opening price and we have some confidence in the momentum to the downside, a short can be entered there, and the target is the gap fill. As far as the stop on that trade, it will generally be whatever was the high during the chop zone when the market was grinding around. Okay, so as long as I can get into that short, let's say the market opens, it's grinding around in here, it's going sideways, it starts to head lower. As long as I can get into that short somewhere where the amount I'm risking for the trade is less than the amount I will make if the trade is going to work, then I can enter the short. If I wait too long and that risk reward is not better, well, then I can't take the trade. Okay. So the look above and fail is the ideal entry for the short today because it allows me to plan for the trade ahead of time. It allows me to get good risk reward on my entry, whereas chasing the trade, watching it go sideways, recognizing the momentum is going lower, and then getting bearish and trying to short on the way down, that is much harder to execute. Okay. Now let's say I'm just wrong. Let's say the market is going to gap and go today. It's going to go higher, right? Let's say I get, the market is going sideways. It pushes up above the overnight high. It comes back down. I get in my short. It doesn't fill the gap and it turns around and it starts coming back up. Well, hopefully I will move my stop below my entry, but even if I don't, and the market comes back up and it stops me out above, the overnight high. Am I upset that I got stopped out of my short? Am I angry at the market? No, of course not. Because at that moment, at the very moment that I get stopped out of my short, I'm getting the information that we've got a gap and go. So then I can look for a long to get to those all-time highs. Okay? For what it's worth, if we do get a gap and go, which I think is less likely, if we do get it, it's not going to be a straight line to all-time highs. We've got resistance at 67.42, and we've got 3-week references before the all-time highs. Repairing any one of these could be enough to reverse the market. So I think there's going to be a lot of resistance up here, basically between 67.42 and 67.55. There's going to be a lot of resistance. So if it is a gap and go today, you don't necessarily need to chase longs. You can wait and buy dips. Okay? Because it'll hit resistance and dip back down before it gets to that all-time high. Okay? So I am biased to the downside initially at market open because I think we want to fill the gap today. If I get evidence from the market that we are not going to fill the gap, then I become bullish. Okay? And I feel no need to chase trades on the long side. If we are going to move higher today, if we are going to make new all-time highs, I will get a dip at some point in the day that I can buy. And that will be the opportunity to get long. Any questions on any of that from the chat? Any questions? Rich is in the house. Good morning to you. Street Salsa is here. Welcome, welcome. Frito in the house. He says, I just use the same mental vision I use when I'm alone. I have no idea what you're responding to, what I said that triggered that statement, but okay, man. That's funny. If you are watching this in the Discord right now, if you scroll up and you click on the Futures-Charles tab, that is where you can ask me questions and, leave comments. I can see Does Man is writing there. He's trying to say something. What is it, Does Man? Liquidated in the house. Malcolm is here. Will, good morning to you. Trevor is here. Welcome, welcome. Does Man says, for the gap and go, how would you interpret the location to invert from? Okay, so this is the idea. One of two things is going to happen today. Okay, because we're opening with a gap. Either we're going to get a gap and go, which means the market is going to keep going up, or we're going to fill the gap, which means the market is going to come back to yesterday's high. We know one of those two things is going to happen. What else do we know for sure before the opening bell rings is going to happen? The market is going to try to look like it's going to go up. It's going to try to look like it's going down multiple times first before it makes whatever move it's going to make, right? Gap and chop is just the new norm of the market. They grind and grind and grind, and they fake you out one way, fake you out the other way, and then they finally make the move, right? I know that before the opening bell rings. I know one of these two things is going to happen, a gap and go or a gap fill, and I know it's going to be choppy as hell. So I'm saying to myself, well, how do I trade this? How do I decide how to enter trades? So that's why I say, if it's just a gap fill, so the market opens and it immediately starts to push down and fill the gap, that is shortable because I believe that that is the higher probability. That is the thing that is going to happen. But knowing where to enter the short is tricky because I basically just have to decide I feel bearish. I just have to decide I'm confident right now that the market is going to fill the gap. So like if you were to ask me to give you a percentage right now at this moment, I would say, 55% chance we fill the gap, 45% chance we get a gap and go. Like my odds in my mind are pretty much 50-50. I'm a little more bearish, but only slightly. But if I start to get a feeling, the market opens and it starts to push lower and I start to get a feeling that the market's going to fill the gap, well, then I'm, 90% sure the market's going to fill the gap, only 10% gap and go. So at that point, I want to enter the short and it's about the risk reward. Can I get in where I'm going to make at least double what I would lose if I got stopped out? That's the sort of trigger that gets me into the trade. Well, what about the look above and fail, right? There is no trigger. The market pushes up above that overnight high. It's bringing in buying up there. I just automatically put a stop sell right at the opening price. I don't have to make a decision to enter this trade. I will guaranteeably be in it if we get the look above and fail. So let's say the market comes down and I get into that, short. Okay. Well, then I've got my stop above whatever is the high prior to that. And I got my take profit, which is the gap fill. And that's it. Now, maybe I might move my stop below my entry, once we start to make the move, if I'm not trusting it. But other than that, there's no managing the trade. Okay. Well, now let's talk about the long side, which was your question. Here I am 10 minutes later, and I still haven't answered your question. Your question was, what is the level to revert from? What is the level to change my mind? The level that matters today is the opening price. Okay. So regardless of how I get short the market, whether the market starts pressing lower and I just market sell, get into something, or I put a stop sell and I get in on a look above and fail, no matter what, once I'm in my short and the market is below that opening price, that's the change level. That is ultimately where you want the market, you want to be you want to be short below it and long above it, essentially, for the rest of the day. That's kind of how you want to be positioned. But you can't just, the moment the market passes through the opening price, you can't get short and put your stop right at the opening price, right? Because then you're going to get stopped out 2 seconds later. So you have to give the market some breathing room when you first enter the trade. But ultimately, the opening price is the change your mind level. So if the market, opens, it goes sideways for a little while, and it starts to press below the opening price, once it comes back up through that opening price, that's when you're biased long. Now, if you're already in a short, first you have to get out of your short. So you probably have to get stopped out before you can start looking for a long. But if you're flat at that moment, so the market is trying to fill the gap, it's pushing lower, you're flat, you're not in a trade. You want to figure out how to get into a long trade if the market doesn't fill the gap, just put a stop buy order right at the opening price. And if the market fills the gap, just delete it. And if the market doesn't fill the gap and it comes back up through the opening price, guess what that means? Slingshot, we're going higher. So getting in at the opening price is the best location. For the short, that is a look above and fail of the overnight high. You're getting in at the opening price, short. And if the market tries to fill the gap and can't, you can get into the gap and go at the opening price for continuation to the upside. And so you say to me, well, Charles, you're a genius. You've just figured this out. It's so easy. All I have to do is be long above the opening price, short below it. So I can just keep, going long, going short, going long, going short. I can just keep trading it like that, can't I? No, you cannot. Why? Because of gap and chop. There is always door number 3. Yes, the market is either going to head up for the all-time high or fill the gap today. That is going to happen. One of those two things. But what we don't know is how many times we need to pass through the opening price first. And it might be 50 times. You know what I mean? We might cross through and 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 cross through. So this idea of getting short at the opening price as you cross through the downside or getting long at the opening price as you cross through the upside, you can only take that trade, a couple of times because you don't want to get whipsawed. You don't want to in and out, in and out, in and out, in and out, in and out. So if I was worried about getting whipsawed, the trigger that would get me long would be buying above the overnight high, regardless of what happens first. If today the market gets above 67.38 and it's finding support up there, that's the long in that support with your stop just inside the range. And the target is the all-time high. Okay. So the good side of gaps, especially large gaps like this, the trading is very simple. Long above the open price, short below. It is really that simple. How does the market make it hard? Whipsaw. Whipsaw, 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 whipsaw first. Then it makes the move. So we must be psychologically prepared for whatever of those 3 scenarios happens, and we should have a way to enter trades no matter what happens. before the market opens. And so you say to me, okay, Charles, well, that's great. You're talking about price action. Let's talk about order flow. Let's talk about Bookmap for a little bit. What are we seeing in here and what can we take away? Well, my reading of the order flow right now is completely neutral. I see this as sideways. So yes, we do have more liquidity above price right now. Okay. Which does technically mean there's a slightly stronger magnet above price than below. But I don't read it as bullish. Why not? Because they started adding liquidity up here and nothing happened with price. Nothing changed. Eventually, price started to drift up towards it. Then they started adding this liquidity right here. Let me switch colors on the pen here. So right here, you see where they started adding liquidity? See where it starts to get dark red right there? What did price do after they started to add that liquidity? It has pushed away. Okay? It didn't come down and then start to drift back up to it, which is what would be if it were a magnet pulling price to it. Instead, it's just pushing away, pushing away. Right now, even they're just adding a bit more liquidity there, and we got another little poke down, took out some more stops. So even though there's more liquidity above price than below, I actually think this is trying to scare price down, which sets us up for gap and chop. Sets us up for that sideways grindy open. DNK says, I disagree with the downside for more than a gap fill, as all indexes will open with a gap and the FOMO will be strong today. All right. Well, it's me versus DNK. I think the gap fill is more likely. And I think that because of options market makers and hedging and the mechanism that the market has been in, DNK is saying he thinks a gap and go is more likely because of the FOMO, because of the emotions and the reaction that the market will have, to opening their charts this morning and finding we're 20 points higher. Let's find out. Let's see what happens. Juan says, good morning. I'm new to Bookmap. I just subscribed to it. Well, we're happy to have you. If you have questions, let me know. Percy in the house. Good morning to you. Aha. Juan says, can we take a look at the NQ? Yes, we can. Okay, so the NQ I would describe as exactly the same thing as the ES. I don't have a specific level picked out for a pin. Let me expand this out a little bit. Yeah, I would say something like that, something around 24,700. But this is a market that is in balance. Yeah, I mean, that's obviously a massively big gap on the Q, significantly increasing the odds that they won't get a gap fill. But, yeah, and the NQ does look a little more bullish than the ES. Overnight inventory is much more long at the highs. That being said, how will you know if you're going to get a gap and go or you're going to get a gap fill today on the NQ? Right here. You got the overnight high. You got a daily high here. You got an overnight high here. You got an overnight high here. You got a basis single prints here. You got a previous day's high here, and you got an overnight high here. So if this market is going to go higher, they should be able to turn 24,900 into support. It's been resistance. It should be able to become support. If you poke above there, you come back down, you start finding support. That's where you get bullish for continuation to the upside. Anything other than that, I'd be bearish for the gap fill. I will admit it doesn't look bearish to me now, but this is why I've become hyper obsessed with recognizing the difference between natural balance and balance by pin, artificial balance being created by options market makers. Because if this was regular balance, we should be really bullish to head to all-time highs on both markets. But I'm not. I'm bearish for a gap fill. That is because I read the markets as being pinned. Willie T in the house, good morning to you. Doesman says, the overnight low is the same as Friday's VPOC. Is that material for you? The overnight low is the same. Oh, yeah. No, that is just another sign of the market being pinned. So one of the ways we know the market is being artificially balanced as opposed to naturally balancing is that you will get reversals at exact levels over and over again. So you will tend to find that POCs line up with each other, opening and closing prices line up with each other. Highs and lows of sessions line up with previous profile references. So yeah, that sort of exact nature. Like here's another fun one for you. Base of spike up becomes opening price the next day. Previous day's closing price becomes low of the day. These types of things, these exact references, base of single prints becomes overnight high. You tend to see a lot more exact things at exact levels when the market is being artificially balanced by the bots. Because those bots have to be programmed to reverse somewhere. So they look for another reference to reverse at. All right, the market is open. We have a gap up. So now we're asking the question, is it a gap and go or a gap fill? Oh, DNK is saying, no, he wasn't projecting a gap and go. He was saying if we get a gap fill, we still could go up later. Yes, I agree with that. But I'm just focused on the first trade of the day right now. I'm just focused on, am I short for gap fill or am I long for gap and go? Once the gap is filled, absolutely, you're right. Then we change gears and we say, do we turn it into support? Are we reversing momentum? Do we want to start looking for longs? Getting long at yesterday's high might end up being an excellent trade. But right now, that's not my focus. Right now, I'm trying to see if I can make money on the way down to yesterday's high. Whether I can make money on the way up, I'll decide when we get there. Just one step at a time. Chat Packed says, what platform do you use for your TPOs? I am using Window Trader for TPOs. Although I am excited to say, and I'm probably not supposed to say this yet, but a little birdie told me that Bookmap is working on their own market profile. So we may not be far from being able to use market profile directly in Bookmap, which would be my preference. But for now, I use Window Trader. Meng says, can you look at Nvidia? Will it go up today or down, you think? All right, well, we got the gap and chop right now. Yeah, so we can take a look at Nvidia. Let's do it. Oh, man. Whip, 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 whip. Oh, man. No, I don't see a day trade in that right now. So unfortunately, I cannot tell you whether Nvidia is going to go up or down today, but I can tell you what the swing trade is because it's setting up for it right now. You see these previous highs in here? This is a balance area high. Okay? This is a very important level. Essentially, the market has told us multiple times when it came up to this level that if it can't keep going, it's going to reverse and come down. So what did it do? It couldn't keep going. It reversed and came down. Then they tried again. Couldn't keep going. What did they do? Reversed and came down. Tried again. Couldn't keep going. What did they do? Reversed and came down. Tried to keep going. Couldn't do it. What did they do? Reversed and came back down. What is different about this last reversal? If this is our balance area right here, what is slightly different about the last time that we tested the balance area high? We only made it halfway. Okay? That's a very important nuance. When the market is in balance like this, it should be able to move from one end to the other over and over again. As long as it keeps moving from one end to the other over and over again, it means it's likely to keep going. But this time it couldn't. So that increases the odds that on the next test of this balance area high, they are actually going to break through and get continuation higher. So I would say that not right now at this moment where there's still uncertainty, but at these previous highs, so let's call it 184, there is a really good potential for a trade here. And the idea is very simply, if the market gets above 184 and it's spending time, in this case, because we're talking about a swing trade, we essentially want to see an entire day above that high. But if we get it, the market is likely to make a move the size of this range right here. So if this range is %, right? That basically means once the market finds support above 184, it can make another 8% move to the upside. Okay? So that's a big move. You know what I mean? There's a lot of potential there. That's 15 points. So you could be looking at a 15-point move to the upside if we break out successfully. The cool thing about that trade is, let's say you get long, the market's up there, it spends a day up there, it's looking bullish, it's going to break, it's going to continue higher. You can put your short or your stop, right inside the range. So you don't have to take on a lot of risk. You could take on, say, 5 points of risk for a 15-point move. And that's a great trade. That's a great setup to have. So I would say right now in Nvidia, it's any man's guess whether we fill the gap or we head for the highs. But once we get to those highs, that's where the good risk reward swing trade sets itself up. And of course, if you get a look above and fail of that balance area high, so if the market pushes up there and then it comes back in and you get stopped out of your long, you got the rest of that 15-point move to the downside to make back the whatever 5 points that you lose on the long. I like very much. All right, so we got gap and chop. The market is going up and down through the opening price, but the ticks are now back at the zero line. So now we can get a better understanding of what's happening in the stock market. Are people buying stocks or are they selling? If more people are buying stocks, the ticks will bounce here at the zero line and it'll start going up again. If more people are selling stocks, it'll continue to press below the zero line and get to negative numbers. If from here it starts to press to below the zero line, I am bearish to try to fill the gap. If we just grind up and down through the opening price and keep bouncing on the zero line, we have to wait for more information. So we're playing tug of war. The ticks might tell us who's going to win, the buyers or the sellers. Mohammed says we have a large order block of red area. How do you know if it can reverse back? Okay. So I presume you were looking at that right there when you asked the question. Here's the short answer. All right, let's take a look at the ticks. Still at 0. Still a little too early to get bearish. So you're looking at a level and you're asking yourself, will that hold as support or resistance, right? When the market pushes into it is essentially what I think you're asking. And the short answer is you just don't know. You don't know if it's going to hold as support or resistance. The way you want to think about these large nodes of liquidity is as a magnet. Okay. Now there's two types of magnets. There's magnets that have a negative force that push the market away. And there are magnets that pull the market to the liquidity. Okay. That's the way to think about it. So when you see the liquidity appear, the next question is, how does the market react? Well, that one just disappeared on us, but using it as an example, when it appeared, what did the market do? It pushed lower. So now they just disappeared it. What do we expect the market to do? Turn around and start coming back up, right? Because they disappeared it. Now, if they start adding it again, then the market's going to head lower again. And so we're constantly watching those changes in liquidity above and below. As we add on one side or remove from the other or vice versa, how does price react to it? Now, once the market gets to that large node, there's one of two things that can happen. One, it can spoof. It can just completely disappear. All right, the ticks are below the 0 line. We are now bearish. So we can now short resistance as long as the market stays below the opening price. So unfortunately, the resistance right now is at the opening price. So that's a little too tight for me to enter a short. If you're a scalper, you could enter a short at 22 with a stop above 23 and give it a try, but that's too tight of a range right now. So what we're doing is we're just watching what happens as we push back into the halfback at 67.22. If that becomes resistance, then we can trust the move. But we are now bearish and looking for resistance and continuation to a gap fill. So anyway, okay, so you've got your large node of liquidity on Bookmap, and the market is working its way towards it or it's being pushed away from it. Let's say it actually gets to that level. Well, either the stuff disappears the second you get there, it spoofs, which is what just happened right now. Do you see that? If we zoom in here, we'll zoom way in. They had liquidity above price. It was sitting there. And then what happened right as price got to it? They didn't let it fill. If they let it fill, we'd see a large volume dot right there. So they did not let it fill. They pulled it. A fraction of a second before the market was able to fill those orders, they got rid of them. Okay. So the way you want to think about those liquidity nodes is if they fill, they will act as support or resistance. So for example, if the market were to push down to 15 and then it actually filled those long orders there, yeah, you're going to get a bounce, right? But if it gets down there and it spoofs and it just randomly disappears, 50-50. It can break higher or it can continue lower. And so you got to kind of just take the volume nodes one at a time and keep track of where they are. So you know that they're targets for price to get there. If they disappear, you know that that's a reversal where the market is going to suddenly start going a different direction. And then if you get to one of those levels, do they spoof it or not? Tells you if it's going to be support or resistance or it's random. And I know that might seem like a lot and that might seem confusing. But the more screen time you spend staring at it, the more it'll just click and it'll just make sense. So for example, the liquidity below price is the magnet right now. Why? Because they're pulling towards it. As they were adding more in here, what did the market do? Turn around and started coming down, right? As they were adding more in here, what did the market do? Turn around and started coming down. So this is now a magnet that is pulling price to it. What did they just do just now? They started to take that liquidity away. Let's zoom right in. I know it's hard to see, guys, but if you zoom in, you can see it. They started to pull liquidity, lighter colors. What did the market do? Bounced. Okay. So that's all we can do is just keep track of, is liquidity pulling price to it or not. All right, so we're watching for resistance. No resistance. The gap and chop continues. We are back to neutral. Are you bullish, Charles? Are you bullish now? No, but we could be. We could, if the market can get back above that open and can start to stay above there, we can be bullish. But right now we're neutral. Gap and chop. I'm talking about gap and chop. There's a question here. Check silver. Check silver. Check your silver. Let me take a quick look at gold. Oh, yeah, it's pumping. So earlier we were talking about the Nvidia stock, right? And, somebody was saying, do I go long or short? And I was saying, well, no, but we have a swing trade. This is that swing trade that I was talking about right here on gold, where we had the balance. Okay. The previous times when we failed those balance area highs, we went to the balance area lows. But on the last one, we only made it halfway. Do you see that? We only made it halfway of that balance area. So when we got above, that was a breakout of balance. And look, it was able to go the distance of the range. What happened when it made it the distance of the range of that balance area? It came to a screeching halt and it spent a week going sideways before it then broke higher again. Okay. So this is the exact same setup that Nvidia now has. You are here on Nvidia. And so there is a potential that if it can bring in those new buyers, you can get a breakout like this and momentum to the upside. All right, so now let's talk about gold. Well, gold is very bullish because you broke out and then you got more new buying and more excess on the upside. So we have now reached that point where you're getting short covering plus FOMO buying again and again and again. You just have momentum. People are now chasing price on gold. And it'll shock you how far they can push it when they have the momentum. Let's take a look at silver. Yeah, it's identical to gold. It's the exact same chart. So to me, at a moment like this, if I'm flat, there's nothing to do. Because the market has momentum up, which means it's likely to keep going up, but it is also getting itself overextended. It's going a little too far, a little too fast. So should I be shorting it because I think it needs to come back down? Well, not yet, because I don't want to short against momentum, right? But as soon as I get a sign that the momentum is over, it's a great short to come back down because this is getting itself overextended. So basically, just look at the daily lows. As long as you keep making higher lows each day, assume it's going to go higher the next day. And as soon as you make a lower low on the daily, that's where you look to short. Okay? And as a swing trader, you can use whatever was the high of the day on that, the last day where you made a high. And then you make your new lower low on the daily. Now you start looking for your short. Okay? But don't short yet, because this thing still has momentum. There's a lot of chase happening here in gold and silver. Which is funny because just over the weekend, I watched a video with a guy who works at a gold store, like those We Buy Gold stores, that you could go to. And he was saying that right now, all the customers that are coming in are selling gold, not buying it. And I thought that was really interesting. I was like, that's the first time I've ever heard of retail being smart, right? Like retail actually taking profits, at an all-time high, as opposed to normally you have retail chasing price at the all-time high. So it looks like on charts they're chasing price, but in the actual, we buy gold stores, people are taking profits. They're turning that gold back into cash. Okay. So now we can start to get bullish. Let's take a look at the ticks. Yes. So now we are officially bullish for a gap and go. Why? What is different between now and say 20 minutes ago? Well, now we tried to fill the gap a few minutes ago. When I got bearish, that was us trying to fill the gap. If we'd have been able to turn the half back into resistance, if we'd have been able to stay below the zero line, we'd be heading down towards the gap fill right now. But that's not what happened, right? Instead, we were able to pass right through that resistance. And so that is a sign of buying. You get a gap up, that's momentum. With new buying, that's a sign the momentum is still going. So again, it's too early to take a long trade because the range is too tight. You'd have to be going long literally right now with a stop below the opening price. So it's too early, but it's starting to get a little bullish. This is what gap and chop is. It gets a little bearish, but you don't quite have a trade yet. It gets a little bullish, but you don't quite have a trade yet. You just have to wait because they could keep chopping for the next 2 hours for all we know. So we are now leaning more bullish and we're seeing, can they bounce the ticks and can they stay above the opening price? If not, it'll be more chop. Okay, moment of truth for the buyers. If they want to make that move higher, they want to bounce right now. We pass back through that opening price. We're going to get a little mini liquidation and more chop. Can the buyers hold it? Can they stay above 67.22? No, sir. Gap and chop continues. DNK says they are not selling to make money. They are selling to pay bills. Well, fuck, that's dark, bro. It's probably true, but that's fucking dark, bro. But you know what that would mean, though? That their thesis that buying gold was a good bet was actually very smart. So even if they're desperate and that's why they're selling, they were at least smart ahead of time. I got to give retail credit for something. Chop, chop, chop all morning long. Chop, chop, chop while I sing this song. Gonna get 'em long, gonna squeeze 'em down. Get 'em short and then turn it back around. Meg says, do you use GEX or Spot Gamma Hero at all? Which do you use? And is GEX Bot any good? I've never used GEX Bot. I do use Spot Gamma, and I do like it. I like it very much. Billy K in the house. Good morning to you. DNK says the Q is looking more bullish. Let's take a look. Yeah, the Q's above the overnight high. Yeah, Q's heading for all-time highs. So now what we want to see is we want to see that overnight high hold as support. So with the NQ, it has not been a gap and chop this morning where it's just been passing through the opening price like the ES. The NQ opened, pushed higher, brought in volume, okay, then pushed higher again and is now bringing in volume higher. That's a sign of momentum up. So now what you're looking for is, one, you could chase at the high right now and go long, although that's terrible risk reward, or you could wait for a dip. If you get a dip today and you get support, then you can really trust that the momentum is going to keep going. Where would that dip come to? This area right here around 24,900. Okay. You got the overnight high and the current halfback. Those are both great support levels. So if on the dip, those hold as support, that's the final check you need to trust the momentum is going to keep going, because otherwise everything looks bullish. It's just that it's FOMO buying. They're chasing. You get a dip that gets bought up by strong hands, and we're going to make new all-time highs on the Q. So watch that overnight high around 24,900. ES, still a gap and chop. Hello, Jerry. Jerry says, honey, mind if we take a look at that gold necklace I got you 20 years ago? Justin says, hello, Newman? Yes, Justin, that is correct. Trader on the Discord says, watch the cash session and you will see a huge gap Good morning, Charles. Good morning to you, trader. And yeah, it was not by definition a large gap. I define large gaps as 20 points, and it was like just shy of that. It was 67.22 to 67.04, so it was 18 points. Very close. Green Horn Bull. I don't know where you guys come up with these names. Green Horn Bull says, in Markets and Minds, do you show how to set up the market internals in Thinkorswim? If you would like, I can send you a link where you can open this up in your Thinkorswim exactly as I have it. Just shoot me an email to ahoy@piratetraders.io and I'll email you that link. And it's like you literally just like click on the link and then boop, this opens up as like a separate screen on your chart. As far as setting them up is concerned, I just have them all in 15-minute increments. There's nothing really special going on here. On the SPX and the NDX, I'm just using a simple 20 moving average on the 15-minute candles. And for the breadth, the advancers versus decliners and the ticks, you could just simply put a line at 0. Just so you know where that 0 line is. Because with these internals, it's really where the market is in relation to 0 is how you read them. So I like to just have that as a very clear, visible thing on my chart. But you can just put a line there. Whoops. You can just put a line there. Bookmap going a little dark here. We must have some news at 10 a.m. So we'll look for a little volatility. Whenever I see Bookmap go dark like this, where there's a clear differentiation between the amount of liquidity currently in the order books and what has been, so far that day, what I generally like to do is stay flat. If I'm in a trade, oh, well, I'm in it, nothing to do. But if I'm flat, I like to wait until I see this side of the order book get as colorful as it previously was. We define that as the liquidity re-entering the market, right? Those bots re-entering the market again. That's when you can start to trust support or resistance levels much more, is once that color returns. While it's dark, anything can happen. Liquidity. Damn, I really hoped we would have a bias before we got to 10 a.m., but we do not. This is a straight up gap and chop on the ES. It does look bullish on the Q, and you are looking for support around that overnight high. So between 24,900 and 24,910, you're looking for a bounce. But the ES is not bullish yet. It is still just chopping. Gap and chop. As far as taking trades for the rest of the day is concerned, you guys know how I feel. I think the higher probability for the ES as of now is a gap fill. That is the market getting back down to 67.04. I need to see us get new selling below the opening price. Then see us push into resistance, again below the opening price. If I see both those things, new selling and then resistance, I short for the gap fill. As far as the gap and go is concerned, it's the same thing in the other direction. So if we, get another push to the upside and then come back down and turn this into support, at support, I could get long. Otherwise, I would need to wait for the market to get above the overnight high and then buy up there with support above the overnight high. And it's same as I said this morning, if today we do get the gap and go, we get to that overnight high and we can't turn it into support, then we're getting the gap fill. So that's another great place to get short on a look above and fail. But as of this moment right now, I'm still totally flat, totally neutral. There's no clear edge one way or another. Not very helpful to you guys, but very helpful to me because it tells me what trade I should be in right now, which is flat. And flat is a trade. Make no mistake about it. All right, guys, with that, I will say thank you so much for joining me. If you have any questions that I did not answer, head on over to the Bookmap Discord to the Future-Charles tab, and you can ask me those questions there, and I will head back later and answer them one by one. Until that, other than that, we'll see you on Monday morning. If you are a member of the Pirate Traders Brigade, so I have a community where I do these live streams every single morning. If you are a member of the brigade, head on over to the live stream, and I will see you there in about 2 minutes. If you are not a member of the brigade, the link is in the description. It is only $20 a month to get insights every single day of what the market is likely to do and real-time analysis on what it is doing. So if you want to get that email to your inbox every morning and you want to get that step-by-step guidance throughout the day, I'm your man. $20 a month. Head on over to piratetraders.io. We'll see you next week. Thanks a lot, everyone. Bye.